Hello and welcome back to my 20,000 favorite people. Hope you're doing well. I'm incredibly excited for today's video because we're finally seeing some healthy consolidation for Bitcoin. And this sentiment cool off here only further increases my conviction that we rally higher into next year. But the elephant in the room that everybody chooses to ignore during mania phases is that long-term holders always take profits during huge rallies because they are the smart money that supports the price and buys the bottom during events like the FTX collapse, the March 2023 banking crisis, and they hodl until new all-time highs and strong price rallies and then decide to take profits. But nobody talks about this when prices are rallying. They only focus on on-chain data when it confirms their bullish bias, and long-term holders are never selling. How could you ever sell your Bitcoin to improve your lifestyle? Don't you know it's going to $1 million per coin? Let's all hold hands and hold it forever and never sell our Bitcoin. But that's not how the long-term holders think. They take some small lifestyle chips off the table when we see these insane price rallies. Now, the good news is MicroStrategy is absorbing a lot of that sell pressure. They announced they deployed that $5.4 billion purchase last week, which got them 55,000 Bitcoin and absorbed a good chunk of that sell pressure. But now we're going to have to wait and see how much more money MicroStrategy will be able to raise and whether other institutions and nation states are going to get involved to keep the price supported, or if we're going to have to enter a prolonged consolidation as this Bitcoin changes hands from long-term holders to short-term holders and retail participants that seem to be piling into the market right now. But you can see here we saw a spark in retail transactions in March 2024 around that local top, which conveniently was also when the long-term holders were distributing back then. And then we also saw a lot of those transactions in 2021. And an important thing to remember here is this can carry on for a couple of months. These mania phases, these exciting periods, these huge rallies, they can go on quite a bit longer than many people anticipate. Yes, it was pretty brief in March. It was quite extended in 2021. It was pretty brief in 2019 when we had that mid-cycle top. And then it was out of control in 2017 where those transactions got all the way up to 4 billion up here. We're only at about 3 billion as of right now. So this isn't a sign that the cycle top has to be in and it's time to panic and be scared. It's just a sign that we are no longer early in this cycle. And this is really the time when there's that mainstream media attention and all the market participants that ignored this space and forgot about it when prices were cheaper are now looking to pile back in because of all the bullish narratives being spread. And this is one of the main reasons why the short cycle scenario is more likely, in my opinion. I think everybody is very familiar with the 4-year cycle now. They're not going to wait to slowly accumulate as prices rise into some 2024 peak. At least that's not my base case. I think everybody knows the drill now, and you see it with mainstream media. Everybody is piling in a lot quicker and a lot earlier because they know what happened in 2017. They know what happened in 2021. We saw that all-time high before the halving as investors front ran that event. And now we've seen an incredible rally ever since the election outcome because we're entering the post-halving year where Bitcoin has done well historically. So everybody is trying to front run all of that action. And I have a hard time seeing that mania lasting for 12 months, but I would be more than happy for that to occur, and I am definitely open to that possibility. In other news, we are seeing the spot Bitcoin ETF buyers taking some profits as well. We saw about 430 million in outflows, but compared to the 3 billion that came in last week, that's really a drop in the bucket. It's only about a little over 10% of the inflows we saw last week. And this is the trend that I expect to continue. I expect there to still be a lot of buying, a lot of inflows, but also some small corrections and profit taking along the way as we work our way towards that major peak. It's also quite healthy that we're seeing a bit of a sentiment reset. We are still in extreme greed with a reading of 81 on the fear and greed index, but that's quite a bit lower than the peak we hit of about 90 last week. And usually after a week of extreme greed, Cool-offs and corrections are very normal, so we'll continue to monitor this going forward. Now, some of the concerning signs is even with the drop we've seen so far, leverage really hasn't budged. We still have record all-time highs on open interest, and I'm not really seeing that much fear or concern out there quite yet. Everybody is excited to buy the dip with leverage. Everybody is excited to pile into altcoins. And I do think they will be right on perhaps a medium-term time frame, but I think many people are underestimating how deep this correction might go. Of course, nobody knows for sure, but the fact that leverage hasn't budged and we've only seen $470 million in liquidations, which is really standard compared to what we've seen just about every day over the past few weeks while Bitcoin was rallying, tells me that perhaps this correction might take a bit longer than many investors anticipate. And this also aligns with our Q4 historical volatility. We've seen a huge move to the upside so far. This is one of the best Novembers ever. It's the best one since 2020. And the one before that was 2017. I don't really count the 2013 one because Bitcoin was really such a small asset back then that it didn't take that much money to have those huge percentages. But compared to November in general, this has been a very good November for Bitcoin. So corrections, consolidations, and volatility are very normal after such a huge rally. And I know it made a lot of you upset, but this is exactly why I took very small profits as prices were skyrocketing, because I could not miss the opportunity to take some small chips off the table when we saw market sentiment at extreme greed for over a week. And now I can comfortably sit through this consolidation and correction knowing that I took some profits off the table, and this cash position is going to allow me to take advantage of opportunities and lower the overall volatility of my portfolio. Now, I do think I talk about my portfolio a bit too much in these videos because I know everybody's situation is quite different and I don't want to spend too much time talking about it. So I've decided to publish this free weekly report where I can concisely discuss what happened in the previous week and how I am adjusting my portfolio accordingly. That way, I don't have to spend too much time in these videos doing so. But as we look forward, I still think after some small cool off and corrections, Bitcoin continues to grind higher into year end. We always have to be open to the possibility of a pullback, especially after such an incredible move. And I have noticed that everyone gets really mad at my balanced market approach when BTC is skyrocketing and sentiment is lingering in extreme greed. But then I get really nice messages and everyone loves my approach when prices start going down or when we see a correction. But for now, really nothing to worry about. After 3 huge green candles, a small consolidation is very normal. And really the first level of worry on this chart is losing the previous all-time high at 74K. And we're gonna wait to see if Bitcoin can start developing a new range here, so we can start looking out for warning signs. But as of right now, this looks like a very healthy cool off. But I have no regrets sticking to my strategy and taking some small profits close to 99K, especially with the performance we've seen this year for Bitcoin and Solana. Ethereum still continues to lag. Perhaps we'll see some rotation into Ethereum now that Bitcoin has gotten so close to 100K, and comparatively, Ethereum's price is still quite low, but I don't see anything super exciting on the chart quite yet. Every time we try to get above the mid-level of our previous range, we see these big wicks as sellers step in. But I do think this can change because I do think some of the Bitcoin whales that take profit on Bitcoin will rotate some of that money into Ethereum instead and spark some FOMO there. As for Solana, pretty big sell-off once we retested that previous Coinbase all-time high. Definitely doesn't look as strong as Bitcoin or Ethereum here with this huge red candle, which completely took back the price action from last week, but corrections are normal after huge moves. We'll see how this weekly candle closes. And of course, a lot of it is going to depend on what Bitcoin decides to do. Now, getting to macro, I wanted to take a moment to clarify this global liquidity chart. I saw your comments about yours looking different and M2 does not look like this, but people define global liquidity different ways. This one that I have here focuses on central bank balance sheets and not the M2 money supply, but this free indicator on TradingView called Global Liquidity Index allows you to filter for what you want want to include. This includes the Fed's balance sheet, the TGA, the reverse repo, the European Central Bank, People's Bank of China, Bank of Japan, other central banks. And if you go ahead and add M2, it'll look slightly different, and you'll see that it's going to be in an uptrend ever since Bitcoin bottomed. So if this is the one that more people are looking at, and if this is the one you guys are using, we can use this one going forward, because I don't think it hurts to include M2 money supply, even though I think the central banks are the main drivers of liquidity. But as you can see, even if we do it this way, once you account for global money supply and you account for central bank balance sheets, especially what we're seeing from the Fed, you can see global liquidity has been going down ever since around September of 2024, as the dollar index has strengthened and as bond yields in the US have risen. So we'll start using this version going forward. That way we're all on the same page. And I have noticed that this one correlates with Bitcoin quite nicely. We saw global liquidity start falling starting in January of 2023, and that's when Bitcoin started selling off into that banking crisis. And then we saw global liquidity peak and start going down in around January of 2024. And what do you know, Bitcoin topped 2 months later, and then we see global liquidity falling as of September of this year. So will Bitcoin follow it once again and have that correction now that global liquidity has been going down? Just like we saw the impulse in global liquidity bottom Bitcoin after the FTX collapse, and the impulse that we saw starting in October started that huge rally, which was further solidified by the ETF launch. And then the impulse that we saw from June to September maybe perhaps sparked this rally, and perhaps the election outcome only added more fuel to the fire after that liquidity impulse. And because this metric measures global liquidity in US dollars, the strength of the dollar index has a huge impact, especially with the fact that it's the global reserve currency and it's still trading in the risk-off region above that major pivot level. We really want to see it fall back lower. That way global liquidity can turn around. You see that it's showing early signs of trying to turn things around ever since we saw that move this week in the dollar index with that slight drop. But if this starts breaking higher, I'm going to be quite concerned for risk assets in the short term. But if it can break lower here, that would give me a lot of confidence that we're going to rally higher over the next few months. Because Bitcoin can ignore the dollar index on shorter term timeframes, but on longer term timeframes, mania phases have required prolonged drops in the dollar index. And I don't like the argument of this time is different because, you know, Elon and Vivek are going to be doing this, or Trump's tariffs are going to be doing that. There's always narratives and there's always different stuff going on, but I like looking at charts because all of those narratives are all captured on the chart. So if the dollar index is strong, it means that relative to other currencies, the dollar is strengthening. And historically, that hasn't been great for Bitcoin on larger timeframes, no matter what the narrative at the time may be. And the same backdrop has been required for the incredible alt seasons as well. Yes, altcoins have been doing okay as some Bitcoin holders have rotated some profits, but if we want to see the altcoin index enter price discovery above the peak that we saw in 2021, and we really want to see those incredible multiples, I assume that it's going to require global liquidity to increase. And the biggest limiter of global liquidity going up right now is the Federal Reserve and their pace of cutting rates and whether or not they start QE. I know China is trying to ease. I know Europe is in trouble and they want to start easing. But as long as the dollar is strong, other central banks around the world also have to slow the pace of their easing. Otherwise, their currencies would devalue too much against the dollar. So if the Fed decides to be hawkish, it also forces a little bit of hawkishness onto the other central banks as well, like the Bank of Japan, the European Central Bank, and the People's Bank of China. So we do want to see the Fed cut rates more aggressively, and we definitely want to see the Fed announce QE sometime soon, because that's going to give other central banks room to ease more as well and not have to worry as much about the devaluation of their currency against the dollar. And we do have a pivotal FOMC meeting coming up in just over 2 weeks where we're going to find out if QE gets announced. Are they going to cut interest rates or are they going to keep them paused, because the market is pretty split right now? And we're also going to get their economic projections, which is where they forecast what they're expected to do with rates going into next year based on the current economic data. So we'll have to wait and see what ends up being said in that meeting. And of course, we're going to get more inflation data and labor market data between now and then, which I'm sure will have an impact on these probabilities. As for traditional markets, we are seeing a bit of a divergence right now. The S&P 500 is breaking into new all-time highs while Bitcoin is correcting. So we don't know if the S&P 500 is going to follow Bitcoin in the short term, because Bitcoin tends to react to liquidity a little bit quicker than the S&P 500 does, or if the S&P 500 can keep grinding higher and pull Bitcoin up with it. As of right now, it's too early to know for sure. This weekly candle so far has been mostly sideways. Now, there is some good news for crypto-specific liquidity. I like to use stablecoin inflows and stablecoin mints as a nice proxy for liquidity and buying power within this industry, and we have seen Tether continue to mint a ton of USDT. We have seen an insane supply increase over the past month or so, and I see this as dry powder that can potentially flow into assets in the near future. And it also allows us to stay around this trend line even while crypto prices are going up, because if the supply of Tether increases, the dominance can remain flat while Bitcoin's price goes up as well. A lot of people were celebrating the trend line breaking last week, but now we are trading back above it. So let's see how this weekly candle closes. I think it's way too early to declare victory and say this trend line that goes all the way back to 2017 is finally breaking, but we'll see how the weekly ends up closing in that regard. But as we look forward towards the longer term, government debt is only going to increase and that debt will get monetized. Liquidity can go down globally in the short term, but as we look forward at the longer term, we know that more global liquidity is required because of all of the debt these central banks around the world have. So I remain bullish on risk assets like the S&P 500 and bullish on fixed supply risk assets like Bitcoin, which is still early in its expansion phase. So all we have to do is sit back, remain patient, manage our emotions, and enjoy the ride. But anyway, let me know what you expect. What version of the cycle do you think is most likely? And as always, thank you so much for the support on the recent videos. Thank you so much for 20,000 subscribers, and I'll talk to you soon.